In the U.S., stock index futures were slightly higher ahead of today's open as investors tried to shrug off concerns following a testimony by the chair of the Federal Reserve. Around 5:30 a.m. Eastern Time, Dow futures were up 58 points, indicating a rise of 88.97 points at the open. The Nasdaq and S&P 500 futures also pointed to a relatively positive open for their respective markets. The moves in U.S. futures came after Wall Street finished the previous trading session on a negative note. As investors try to shrug off concerns about their high interest rates, a slew of events are expected to keep investors busy during today's session. On the data front, a second estimate of the U.S. gross domestic product data is slated to come out at 8:30 a.m. Eastern Time, with investors set to see if there's any clues as to how the U.S. economy is performing. At 9:45 a.m. Eastern Time, Chicago Purchasing Managers Index data is due, followed by pending home sales data at 10 a.m. Eastern Time. Mortgage applications will also be released at the usual weekly time of 8 a.m. Eastern Time. That should have been out by now. And moving on now to Asia, markets closed lower today after Chinese manufacturing data came in below expectations. Markets also digested comments from the new Federal Reserve chief. Losses in Asia, which were initially slighter than declines seen stateside, steepened as the session progressed. The Nikkei 225 declined 321.62 points to end at 22,068.24. In some of its recent gains. South Korea's Kospi fell 1.17%. Tech heavyweight Samsung Electronics, which traded in positive territory earlier in the day, closed lower by 0.68% as other tech stocks recorded declines. Over in Australia, the S&P ASX 200 finished the session 0.68% lower, with just 3 out of its 12 sub-indices closing in positive territory. Meanwhile, Greater China markets extended losses after declining in the last session. Hong Kong's Hang Seng Index fell 423.94 points. Markets in mainland China were mixed. The Shanghai Composite lost 0.99%, while the Shenzhen Composite paired early losses to close higher by 0.16%. And away from the markets and back here in Africa, in South Africa precisely, the newly appointed Finance Minister Nhlanhla Nene says he will be meeting with rating agencies soon. Speaking after being sworn in, Nene said it was too early to say if South Africa will be downgraded by Moody's, which rates the country a notch above junk and is due to make decision at the end of March. In the meantime, S&P Global Ratings has downgraded the credit rating for South Africa's state-run power utility Eskom to CCC+ from B-, citing liquidity concerns and insufficient government support that could trigger a default. The agency says Eskom remains at risk of facing a distressed exchange situation or default in the next 6 months, despite securing 30 billion rand in short-term funding from local and international funders so far this year. And in Namibia, the government will table laws to better distribute wealth among its citizens, most of whom are black, by the end of the year, despite resistance from businesses. The government of the Southwest African nation, that's among the world's most economically unequal, is in the final leg of consultations on the National Equitable Economic Empowerment Framework that will make it mandatory for white-owned businesses to sell a 25% stake to blacks. The bill outlines 6 areas to increase black citizens' participation in business, including developing people's skills and providing financing for those disadvantaged by inequality to buy stakes in companies. While only 6% of Namibians' 2.5 million citizens are white, they own most enterprises. That's the legacy of white minority rule South Africa imposed when it controlled Namibia from World War I to 1990, with black people being disenfranchised and displaced. However, the Namibia Chamber of Commerce and Industry wants the focus on economic ownership scrapped, saying it will result in capital flight. And here in Nigeria, power supply remains a drag to investments in Nigeria's cement sector as miners and manufacturers continue to seek alternatives to the challenge. But with government's intervention in the area of gas pipelines installations across some major corridors, One of the leading miners in the country, the chairman of Boa Group, Mr. Abdul Samad Rabiu, has high hopes on the project, which he expects to ease energy constraints in his sector.
Whenever you have this kind of investments or this kind of projects, you have to actually provide for your own, energy, needs. So that is why you see most of these plants, they come with their captive, power plants. For example, the Sokoto that we are commissioning in April this year, is coming with a 32 megawatts captive power plant. So that is the challenge we have. But government needs to do more. I think, they are trying to do more. But I think what it is, the issue that is there is the cost. And, it is not going to be easy for government to provide that. They need to do more. But I think, the fact that, they are putting in a lot of money, I mean, there are quite a few things I think that the government is doing that will probably enhance the power situation. For example, like the AKK that the government is doing right now, which is the Ajakuta Kaduna Kano gas pipeline project. If that is completed and we're able to get gas, say from Ajakuta all the way to the north, I think you'll see a lot more people investing, in infrastructure as far as power is concerned. And if that happens, you'll see quite a lot of improvement in terms of power supply.
When we come back after the break, Ghana to tighten controls on gold exports to protect revenue. Details in a moment.